Hello, everybody. Welcome to Zoe's Treasures. Uh-oh, what am I hearing back? There we go. All right, I'm hearing myself like 3 or 4 times. Hope you guys are doing great. Happy, what night are we? Tuesday night. This is only my second, to me, this is late night. Hello, Wild Daisies. It's my only, to me, this is late night, and this is only my second late night show. I love discounts. Well, just come and raid me. Like, just stop your show and come over here. Thanks for sharing this. I appreciate it. So it feels weird to be on this late at night. I plan on going about an hour because taxes, they're a heavy topic. So tonight, hey, it's good to see you too. Tonight we're going to talk about, do you have to pay estimated taxes or quarterly taxes? So it's really dependent on your situation. We're going to go through a couple scenarios so you can figure out if you do or if you don't, ways to pay it, maybe ways to kind of work around it a little bit, and how much you need to set aside if you do fall in that category. So that's kind of what we're going to focus on. If time permits, if you guys have other questions, I'm always happy to try to address other tax or accounting type questions in this show, but I am aiming for about an hour tonight. However, I am going to auction one thing tonight and only one thing, because if any of you happen to be on this weekend and saw the Battle of the Wood, I was going to auction an item and I did not have a random listing set up. And somebody, I got a message afterwards. They're like, oh, I really wanted that. So I promised them I would auction it tonight. So I'm going to just auction one thing and then we're going to get to chatting. So here we go. Oh, my husband's telling me to wait. I've got to keep moving, honey. I got to move. Sorry. All right. So here it is. I'm going to auction this one thing. This is a wood letter holder, or like bill holder, and it has the butterflies on there. It is so cute. There is a little call out, so you can see it has 3 little hooks down here for like where you would put your keys. One of the hooks, where is it? Right here. One hook is missing. So you have 3, not 4 hooks. You can see where you could probably add another one. There's a hole on top to hang it on your wall, and it's, I don't know, a couple of feet high. So we're going to do $1 free shipping. And we are going to start that. I'm going to run it for 10. My husband is giving me a hard time. I am just very sorry, my love. She is in a show. So there was one person who kind of was interested, but I'm trying to decide if I should wait or keep going. We're going to go with it. All right. So we'll do 10 seconds. And it is up and running if you are interested in this really cute wooden butterfly, like letter or bill holder or little ephemera holder, whatever you would want to put in there, and I will ship it to you for free. And it's the only thing I'm selling tonight. There is stuff in the bin if you're interested. Wild Daisy Market, that is heading to you. Thank you so much. All right. I feel that I've fulfilled my promise of running it tonight. So, okay. Thank you, Natural State of High, for offering. I do appreciate that, though. All right. Estimated taxes. So what are estimated taxes? Basically, as we all know, we make income, you make money, the IRS wants their share, right? And we are talking federal withholding. So this is federal withholding and Social Security, Medicare taxes. Normally, if you have a job where you work for somebody else and you get a paycheck, your employer withholds this money out of your paycheck. You don't have to worry about it. At the end of the year, you get a W-2, you file your tax return, right? So normally it's nice and easy. You don't have to worry about it. You just need to know how many like exemptions to put on your W-4. Well, when you work for yourself or when you're making other income, the taxes still need to get paid on that. So everything we're earning from whatnot, we still need to pay taxes. And the IRS doesn't like to wait until the end of the year. The IRS says, no, you need to pay me or pay us on a regular basis. So they're not, too friendly. They're going to make you wait till the end of the year to get a refund, but they want their money every single quarter. Not quite fair, but it's the way it is. So estimated taxes, and I'm talking just federal, not state. So state is a similar set of rules, but each state is a little bit unique to each state. So if you expect to owe at least $1,000 in taxes when you file your return, then you should be paying in estimated taxes. So you can hear that and you can get like, oh no, I made at least $1,000, or I expect to owe $1,000. Let's walk through it. I'm going to go step by step, and we're going to go through and see exactly, do you really owe? How do you figure out how much you owe? And do you really even need to pay it quarterly? So as you earn the income, they want you to pay it. We already established that. How do you figure this out? I'm going to give you formulas right now. I'm going to give you a very detailed math formula, and I'm going to give you a really simple, easy way. So we're going to do both. So for the people who like numbers and details, I got you covered. For the people who want straight, simple, to the point, easy, I got you covered too. If you want to figure this out on your own, there is a form from the IRS called the 1040-ES. And that is a worksheet that helps you understand and estimate what your taxes are. ES, like estimated taxes. There is a general rule of thumb. 90% of the tax you owe. So what you have to pay as a general rule of thumb is 90% of the tax you're going to owe for this year, or 100% of last year's tax liability. So if you owed the IRS $1,000 last year, the IRS is expecting that they're going to get at least $1,000 from you during the course of this year. If you didn't owe anything last year, but all of a sudden you are just on fire on Whatnot and you're exploding and you're making a lot of money, then the IRS expects to have 90% of the tax that you'll owe for this year. What happens if you don't pay it? What happens if you're like, this is confusing. I don't want to deal with taxes every quarter. I'm just going to wait and file my return, go to my CPA, come next April, let them file it for me. You could do that. But if the IRS thinks that you made an underpayment, you're going to get an underpayment penalty. So it's best to understand this at the front end and decide if you need to pay it or not. So let's walk through examples. Again, hang out with me. If you're not the detail person and you want the easy method, we're going to do the easy method at the very end. But I really wanted to give all the details first so you get a full picture. So the first scenario is you're a Whatnot seller. You don't have another job. Whatnot reselling is your primary income. So let's just say you sell vintage on Whatnot. And after you subtract your inventory cost, all your shipping, all your business expenses, your net income or your net profit on your Schedule C, and we've talked about Schedule Cs before, and we'll go into those in more detail, but your net profit is $20,000. So that's going to be the number. Let's see. I'm going to try to, no, my iPad's not going to work. Okay. I was going to try to write it out for you, but my iPad's not working right. So after everything, you've done all of your Schedule C, you have $20,000 of net profit for the year. Okay, that's what you're left with after all your expenses. So that's what we're starting with. We're assuming that you have no other job and you are left with $20,000 on your Schedule C. Okay, so you have that $20,000. I'm also, just for simplicity, going to assume you're single. So if you're single, you get a standard deduction of $15,600. If you're married, head of household, that number increases. Okay, just for reference, that would increase. So you take $20,000, that's your net income, minus your standard deduction of $15,600. That leaves you with $4,400. That's your taxable income. Okay, so you start with your net, you deduct your standard deduction, whether that be single, married, head of household, and you get your taxable income. For our example, our taxable income is $4,400. Southern Charm, rating with a party of 9. Welcome in, Southern Charm.
Welcome in, Raiders. Grab your hats and step into Zoe's Treasures, where the relics aren't cursed. They are for sale.
We do something just a little bit different, so we're going to take a quick little break from taxes for 1 second. When somebody raids us, we like to honor them a bit by showing their profile. So, are you ready, my love? He is nowhere near ready. As soon as he's ready, we'll come in there. Hello, Lincho. So you just let me know when you're ready and we'll get back to that. He's fired. He's just not doing his job. He's super slow. All right, here we go. So thank you, Southern Charm. Please let everybody know something about yourself in the chat. And my love, are we just going to move on, or is this not working? All right.
Welcome in,
All
Raiders.
right, there we go.
Grab your hats and step
Took us
into
a bit, but
Zoe's
when somebody raids
treasures,
us, we do
where
like
the
to bring up
relics
their
aren't
profile.
cursed. They
Southern
are
Charm
for sale.
is not only a great person, but I consider her a friend of mine, her and her husband, Tim. They are doing all $5 shipping. Tonight they had a show with $1 starts. And we have, let's see, when is her next show, my love? If you guys like what you see for Southern Charm, her next show is 9/26, Salvage and Rusty Krusty, and she has some of the best Rusty Krusty out there. All right, let's get back to our taxes. Thank you, Southern Charm. Okay, so just to recap, we made $20,000 net. We took the standard deduction because we're single, $15,600. Our taxable income is $4,400. So the first thing we need to do is calculate our federal tax. How much do we owe the IRS straight up just on our federal tax? This is the same as if you were employed, what they call the withholding. So how much withholding do you need to pay on that $4,400? We're going to assume at the $4,400 mark, you're in a 10% tax bracket. So that's $440. So we started with $20,000, took a standard deduction, and we are down to now owing the IRS $440. Okay, not so bad. But wait, we don't just have to pay the IRS the withholding. We also have to pay our Social Security and Medicare taxes, which for us as self-employed people are called self-employment taxes. If you work for somebody else, they automatically take that Social Security and Medicare tax out of your payroll. So they withhold it and they match it. So when you work for somebody else, it's 15.3%. So when you work for somebody else, half of that 15.3% you pay comes out of your check, and then that employer matches that amount. Well, when you're working for yourself, nobody's pulling that out. So the IRS expects you to pay that in place of an employer, right? They want to still make sure they're getting their share. So you're paying the IRS withholding tax and Social Security, Medicare. It was more than the 35% we should be setting. 35% is actually pretty high. So we're going to get into how much you should be setting aside. And I feel 35% is extremely high unless you are in some of the very highest tax brackets. So your withholding, in our example, if your net income was $4,400, your taxable income, that's a 10% tax bracket. So you owe the IRS in withholding $440. But now we need to figure out our Social Security, Medicare, which is the 15.3%, okay? So in order to do that, we're gonna take that first number, that 20,000, because that Social Security, Medicare isn't calculated on that, on your taxable income of the 4,400. It's calculated on that 20,000, and your net profit on your Schedule C. So you take the 20,000. The IRS gives you a little break because remember I said if you work for somebody else, your employer pays half of that. So the IRS says, okay, we're going to give you a little break since you work for yourself and normally an employer would pay it. We're going to cut you a little bit of slack there. So you take that 20,000 and you multiply it by 92.35%. Now I may be losing some of you with all these numbers, but remember, hang in there. I'm going to give you a very easy way at the end, but I want to walk through the details first. So if I multiply that by the 92.35%, I get 18,470 that's subject to that self-employment tax. Remember what the self-employment tax was? 15.3. So I take my 18 and some change, I multiply it by 15.3. Now I owe $2,825 in self-employment tax, but I also owe the $440 in withholding. So I add those together. The total I owe the IRS is $3,265. So let's just kind of recap very simply. I did my Schedule C, and you're going to talk about being an LLC on what number. I will, at the very end, I will address that. That is my soapbox stuff, but yes, I will address that one. So to recap, You did your Schedule C, you got your revenue, you took out all those great expenses that we can deduct, and your bottom line, $20,000. On that $20,000, at the end of the day, you're going to owe the IRS $440 in withholding tax, federal income tax, and $2,825 in self-employment tax. Okay, so out of $20,000, you owe $3,265.
If you're just joining us and you're missing the first part, you want to rewatch it, you can do it on our YouTube channel.
Thank you, my love. All right. So how do you pay that? So now you're like, okay, I owe $3,265 on my net $20,000 of income. How do I pay this? You take that $3,265, you divide it by 4, because we're going by quarters, and every single quarter, April, June, September, and January, you pay the IRS $816. Okay? So that's a long, detailed way. If you are just a whatnot person, you don't have a W-2 job. I'm going to give you the shortcut in a minute. Let's just look at another example first. Hello. Let's look at an example. What if whatnot is your side hustle? What if you have a W-2 job? This is wonderful. You have a W-2 job. Your employer is already taking out taxes and sending them on your behalf to the IRS, right? But you also have this extra income from whatnot and any other platforms that you may be selling on, right? So let's walk through what an example of that looks like. Then I promise I'm going to get to the easy numbers. Let's pretend that you make $40,000 a year at your W-2 job. So whatever you do, you're a secretary, you clean offices, whatever you do, you make $40,000 a year, okay? And then on whatnot, your side hustle, you busted your butt, you made an extra $10,000 on whatnot, okay? $10,000 after all expenses. We're talking net profit, bottom line. So after you get to all your deductions. So you're filing we're going to say you're single. So you made $50,000 total, $40,000 from your W-2, $10,000 from whatnot. Okay, so this is if you have a job and you're on whatnot. We're going to go through that same kind of type of calculations. First thing we're going to do, what if I start a nonprofit and use funds for homeless children? You can, however, that's a whole nother topic. There are limits to how much as a nonprofit that you can contribute to the nonprofit. You could start a nonprofit. That's a whole nother kind of ballpark, and there's a lot to it. I do have a history of nonprofits. I actually worked in nonprofits for about 15 years. So if that's something that you're interested in and would like to learn more, please message me. I'm always happy to talk to you about that. But I'm going to keep walking through this example real quick. So I made $50,000. I still have to figure out this. I have to pay the same type of taxes. I have to pay my withholding and I have to pay my self-employment tax. Because while my employer is covering part of it for that $40,000 I made from that job, I still have to take care of the $10,000. I have to pay taxes on the $10,000 I made from whatnot, right? So I'm going to take that $10,000 I made from whatnot and I'm going to calculate my self-employment tax. That's at 15.3%. So I'm going to do it the same way we just talked about. I'm not going to go through every single number here, but basically your self-employment tax comes to $1,412 on a $10,000 income, okay? So you made 40 from your job. I'm sorry, how often what, my love? Oh, that's how much you owe. The $1,412 self-employment is how much you would owe on $10,000 of income, self-employment tax. That is the amount that we're going to talk about that you pay quarterly. But let's just step back a second. You made $40,000 from your W-2 job. You made $10,000 from whatnot. My $40,000 is being taken care of. My employer sends that money in. I don't need to really worry about that. I do need to worry about that $10,000. So I'm going to calculate my self-employment tax, which is that $1,400. I'm going to then take my amount that's subject to my self-employment tax. I wish I could be your accountant too. I'm going to take my amount, the 10,000 plus my 40,000. Remember, you get a little bit of a discount there because the IRS says we're not going to charge you the full amount on that 15.3. You minus your standard deduction, you get down to taxable income of $3,694. So from your $50,000 of money that you got, 40 from a job, 10 from whatnot, after you take your standard deduction, you're down to about 33,000. That's actually taxable, okay? Remember, we already figured our self-employment tax, but now we got to figure the withholding side. So if you're looking at that one, you're probably in more of a 20% tax bracket. I'm not going to go into how the tax brackets work. It gets very confusing. It is a scaffold approach. So for the first 11,000, you're charged a certain percentage. And then for the next section, the next bracket, you're charged another percentage, and it goes up from there. Overall, if you were to use the IRS tax tables, your withholding tax would be $3,811. What if whatnot is your only income? Not sure. I did go over that, but I'm going to recap it in a very simple manner, like a very simple way. Right now, I'm giving you like all the calculation in detail just so you really understand the pieces. Then we're going to talk. All right, I don't like all the numbers. Keep making this easy for me. We're about to get to that. But if I have the 40,000 and the 10,000, basically I owe two things: $3,811 on withholding and $1,412 on self-employment. Okay, but we know because we're W-2 that some of that withholding my employer's taking care of. Let's just say my employer through my paychecks has withheld $4,200 of that. That's already sent to the IRS. So if I take $5,223 minus $4,200, I'm left with about $1,000 that I know I'm going to owe because I worked whatnot on top of my W-2 job. You can take that $1,000, divide it by 4, send in quarterly payments. The IRS isn't going to stop you. They're going to be like, yeah, show me the money, send me my check, right? Or if you are a person that does whatnot as a side hustle and you have a W-2 job, instead of worrying about estimated taxes, the easiest thing to do is to increase your withholding on your W-2 job. So you go to your HR department or your payroll person, whoever is at your job, and you say, hey, on my paychecks, instead of taking out what you're taking out, I want you to take out an extra $50 per pay period. And that's going to cover what you owe. So if you know you're going to owe about $1,000, you get paid, 24 times a year, twice a month. You divide the $1,000 by your paychecks. You figure out how much extra you put in. So now you're satisfying the IRS. They're getting their money throughout the year as you earn it, but you don't have to worry about paying quarterly taxes. Okay? I don't like to scare at the yes, exactly. And that's just it. You don't want to ignore this, because if you owe more than that $1,000, remember at the very beginning, we talked about two things the IRS is looking at. They expect to get from you in 2025, the IRS is expecting one of two things. Either 100% of what you paid in last year, they're expecting to see this year, because look at it from the IRS point of view. Most of us, year over year is about the same, right? Either we're making about the same amount of money, or maybe we're gradually increasing as we grow and develop our businesses or in our careers. The only time stuff that really changes is when you have major life events. You have a child, you give birth, you adopt a child, you get married. Maybe if you get divorced and you go from a married to a single. So outside of a life event, the IRS is like, you know what, you're pretty much making the same income and maybe growing a bit year after year. Yep, a good receipt tracker helps. When my husband, so there are some differences when you work jobs that you're on commission and things fluctuate. There could be a lot of differences. But regardless, the IRS is going to they're going to look at last year's tax return. So in 2025, the IRS is looking at your 2024 tax return. They're looking at what your tax liability was. What did you owe them? So in 2025, they're expecting that you are paying in that same amount of money. And if you expect to owe more than that same amount of money, you need to be figuring out how to pay them during the year, either increasing your W-2, your withholding through your job, or making a quarterly payment, one or the other. Oh yeah, that can happen if you're not expecting it. And if you owed nothing last year, if you owed no money last year, you overpaid, whatever reason, you're just starting out, there can be plenty of reasons why you owed nothing. If you owed nothing, then the IRS is expecting that you're on top of your finances, because the IRS says it's all on you to keep track of this, that you're going to pay in at least 90% of what you owe during the year. Normally, we don't worry about this. Most of us grow up to get a job and go work for somebody who does payroll and pulls it out of our checks, and we don't have to think about it. That your whole perspective on that has to change the minute you start selling on Whatnot, because now you are responsible for making sure that you are paying in the right amount that you should be paying in. Let's talk about how to make this easy. I gave you all the numbers. Your head's probably like, okay, that's enough numbers, Tracy. Just give me the straightforward, easy method, right? So let's talk about super easy methods here. Our problem is that we're not prepared for that and are still paying last year and now saving for next year. Yeah, it'll get you. And this is part of the reason why I wanted to do this discussion now. We're still in October. You have a chance. I mean, it's October. You only have one quarter left, but you still have a chance to kind of figure this out. We have 6 months before April, right? You still have 6 months to figure this out before you file your tax return and start to make payments and start to be like, ugh, I may be owing this year because I didn't pay. Also, come January 1st, and when we get into 2026, you're like, all right, I'm not going to get stuck this year. I know what I need to do. I need to be on top of my finances. I need to know if I am making enough money to whereas I need to make quarterly payments, or if I have a W-2 job, increase my withholding on my W-2 job. Let's look how we can figure this out super easy without all the complicated formulas and all of that stuff. So let's say side hustle only, no W-2, you are in it to win it. You are Whatnot all the way. You're creating your business and you're hustling. This is your full-time job, all right? If you're doing that, the recommendation is to take 27% of your net profit and put that aside. 27%. You're going to hear people say, oh, put 30, put 40, do this. 27%. So if you have a job, you don't do your taxes like you would with a normal. I'm not sure what you're asking. Hold on, let me read that again. Maybe I didn't get it. So if you have a job, you don't do your taxes like you would with a normal job. I'm not sure what you're asking. Try to clarify that. Is that factoring both state and federal? No, I am only talking federal. Each state typically follows federal in their rules and regulations, but each state is so different, there's no way that I can address all the states. So I am talking just federal. But most of these rules also apply to your state. So if you happen to live in one of the many, many states that charge us wonderful state income tax, you got to count that in too and put more money aside for that one. So 27% is what I recommend. Why? Because 27% is the middle point between 25 and 30, which are the most common tax brackets out there. 25 to 30% covers the majority of people in the United States. So if you go smack dab in the middle at 27%, you're probably going to be okay. You're going to be putting enough money away. So you want to put away 27% of your net profit. When I say net profit, you take your money you earn from Whatnot, you minus your cost of goods sold, you take out all those wonderful expenses that we can deduct, and it's that bottom line, your net profit, okay? So if you made $50,000 and you had expenses that equaled $40,000, your net profit is $10,000. Okay, you should be taking 27% of that $10,000 and putting it aside in a savings account. Now, don't do this once a year because you got to pay this quarterly, right? If you're a business owner and you have to pay quarterly taxes, if W-2 job, exactly, that's exactly what we're talking about, is if you do not have a W-2 job, how to figure out how much you would owe quarterly, how to do that calculation, when to pay it, how to pay it. If you are a business owner, because the minute you pick up your phone and you sell something on Whatnot, you are a business, whether you think you are or not. We talked last week, there are some hobby stuff out there, but so if you don't have a W-2 job, you need to understand when to pay in your estimated taxes, because you don't want to get to the end of the year and the IRS says, you didn't pay me what you owed me, so I'm going to give you a penalty for not doing what you were supposed to, and I'm going to charge you interest on the money that you owed me, and you still get to pay me what you owe. Yeah, they're just not nice about it at the end of the year. Think about if it was the other way around. If somebody owed you money, you made a loan to somebody, you don't want to wait once a year and get that money. You're like, no, I want monthly payments. I want whatever. The IRS wants quarterly payments. Okay. So if Whatnot is your sole thing, let's see, this is for all sellers, not just big sellers. I started Whatnot halfway through the year and have very low sale dollars and actual profit after fees. So that's, in a way, that's good, because remember, we are looking at your self-employment tax and your withholding tax. Your federal income tax is calculated on your net profit. And if you're just joining, I'll explain that net profit again. You have revenue. This is all the money you're earning, all those sales you're making, okay? You have your cost of goods sold. What does it cost you to have those items to sell? Then you have all your other expenses, your cell phone, your shipping materials, everything else that you have to pay for. Then you get that bottom number, your net profit, okay? So after all your expenses. So in secondhand Serenade, in your case, if you're not making too much, if you made, $10,000 on Whatnot, but your expenses were $9,900 and your net profit's $100, this isn't going to be a big deal to you. But that's right now, right? What happens if all of a sudden, you guys, you've seen it happen. You can be grinding and not have good shows, and then all of a sudden a couple of weeks goes by and you're like, what the heck? People are coming to my shows, I'm having sold out shows, I'm making money, and before you know it, that money's coming in, and you need to stop and say, okay, I have some tax implications. What do I need to do? Let me get this off the screen. This is bothering me on the screen. Okay. Why can't I unpin it? No, I guess I'm not going to unpin it. Okay, we'll do this. And now we'll unpin it. Okay. And you can deduct all expenses, space and home used for sales, packaging, mileage for sourcing, supplies. Correct, Moni, that is absolutely correct. I'm worried because we've made $10K in the first month. See? First month that you're exploding. That's you made, though. Have you done your accounting? Do you know what your cost of goods is? Do you know what your expenses are? What's your net? You don't have to tell me your net. That's personal numbers. I'll never ask for those. But think about that. What's your net? That's what we're calculating, that net. So, okay, so you've brought it out in the public, so we can talk about it. So if you've made $6,000 already, and that's in 1 month, more than likely you're gonna owe more than $1,000 than what you owed last year in taxes. So this is very applicable to you. Yes, I would. It's a good thing you have a sister that's an accountant. If this sounds confusing, I'm bringing it mainly so you have a base understanding. If you're like, you know what, I got this. I can go download that 1040 ES form. I can follow the calculations. I can figure out what I owe. And it will walk you through it. So if you missed the first part, if you go to irs.gov and you do a little search for 1040-ES, that's the form that helps you calculate everything I just went through. So that's where I went and got a lot of these numbers from so that I can bring them to you. This isn't something I've made up. This is all straight from the IRS. But if you're like, okay, I just need to put money aside and I'm going to go to my accountant and my accountant's going to tell me how much to pay each quarter. Here's how you figure out how much to put aside. You're just doing Whatnot. That's your hustle, or reselling Whatnot, other platforms. 27% of your net profit should get put aside into a special account, saving somewhere that you're making your quarterly payments from. Do you have to show receipts? And I ask because I don't keep them or I go to garage sales. You do not have to show receipts unless you're audited by the IRS. The IRS takes your word for it until they have some type of red flag or reason to believe you are not being honest, and then you get audited and they will ask for receipts. Garage sales typically don't do receipts, but you can just keep a log. And as long as you're consistent with keeping a log, you should be fine if you ever were to be audited. You can deduct a vehicle as an expense. There's a couple different methods. As we move through each week, I will start to talk about the Schedule C. We are going to break down every single part of it. We're going to talk about vehicles, home office. So kind of hang out, keep coming back. We're going to go piece by piece by piece. If you are reinvesting every cent into the new inventory, yes, it does, because it's at the end of the day. It's at the end of whatever period you're looking at. So at the end of the month, say, let's just go monthly. So you look for the month of September, you made how much revenue? What was your cost of goods minus your expenses? You get your net, okay? The IRS can care less what you're spending your net on. The IRS doesn't give a hoot if you take that money and reinvest it back into your business. They just know you had net profit. That net profit is taxable. So it's great that you're reinvesting it, but you start to look at month by month and then you get to the whole year. What period are we in? We are in the third, what month? We're in September. We're in third quarter right now. So let's just go back really quick. We're talking net. So I've said it a few times. Hopefully you guys are all cool. We know what net is. If this is your main hustle, 27% you should be putting away. Now you can calculate that per show, per week, per month. But you should be putting it away. So quarterly, you can be making those payments or going to your accountant. And when your accountant says, or your CPA says, all right, you owe $800, you're like, oof, I've been putting 27% away. I'm good. Let me write you a check, right? Then you don't have to worry about it. Then at the end of the year, you do this all year long. Your CPA, your accountant does your taxes. And they're like, look, you're all paid up. You did good. You don't owe the IRS any money. And if you put aside 27% and maybe you still have a little bit in there, guess what? You've got a vacation fund now. Now you got a little bit of extra play money. It's never going to hurt you to put that 27% aside. What will hurt you is if you do not plan for this at all, you put no money aside and your accountant, you go to your accountant and he says, oh, you owe $1,000. And you're like, damn, I better do a show. Better make some more money to be taxed on to pay my taxes, right? That's what hurts. Or it hurts even more if you go all year long and you ignore it and the IRS says, guess what? You owe us $8,000 plus a late penalty fee plus interest on all that money you should have been paying us all year long. And that's what will happen. They're just not nice about it. Okay. What if you have a side job? What if you have a W-2 job and Whatnot's your side hustle? How much should you put away from your Whatnot net profit in that scenario? For that one, I recommend 18%. That's in the middle of 15 and 20%. And this is calculating in that a good chunk of your taxable income is coming from your W-2 job, that your employer is putting money aside, pulling it out of your checks. Okay. So if you have a W-2 job and you're doing a Whatnot side hustle, instead of 27%, you should be putting 18% of that net income into a savings account to pay your quarterly taxes. Or, like we talked about, if you have a W-2 job, this is the beauty. Look, it is hard working a W-2 job, working for somebody else and doing Whatnot. I do it. I totally get the grind. But you kind of have an advantage because instead of writing quarterly checks to the IRS, you can just ask your employer to pull out more from your paychecks. So basically, if I make over $1,000 income total and only one income from Whatnot, I would owe $270 about. You should put about $270 aside. So if you were in $1,000 tax, if you had $1,000 at the end of the year, that would be washed out with your standard deduction. You wouldn't owe anything. You would still owe the 15.3% self-employment tax on that though, but you wouldn't owe withholding. If that's $1,000 in a month, you got to start calculating it out a little bit more. But how do you do your accounting? Like it's hard for me to say, oh, put this much away, for the whole year. So you probably at $1,000, you would still owe the 15.3%, but you wouldn't have any withholding on that. It's easy for me to say, oh, just put this much away, put this much away. I don't know how you do your accounting. As a CPA, I would suggest at least once a month, you're truing up your accounting records. You're making sure you've logged all your revenue, you've logged all your expenses, and you know what your net profit is for the month. At that point, I would say, okay, I made this much net profit, 20%, 27% of my net profit is whatever it is. Put that money away monthly. Will you do a show about getting your own tax ID for your business? I will. That's really easy. I can address that in just a little bit. So we have EIN, which is what that is. EIN, and we also have an LLC question. So we'll get to those in just a few minutes. So recap, Whatnot's your only gig? Whatnot or reselling's your only gig? I would put 27% of your net income away. You have a W-2 job and Whatnot? I would put 18% of that money away, okay? If you're married and your spouse has a W-2 job, but you don't, so hubby goes off to his job every day and you get the privilege of doing Whatnot full-time. Guess what? Hubby could take more out of have his withholding increased. The IRS looks at you as a single person. Okay, makes sense. I don't know how to do accounting. I didn't have an income last year with the new baby, and I just started in July. I'll start doing the 27%. There you go. So because you didn't have an income last year, the IRS is looking that this year, 90% of what you're going to owe should be paid in. Do I need proof that the money I spend at yard sales is a business expense? You do not need proof. You just need to keep some type of a log. I haven't gotten a tax ID. I'm about 8K in sales here, and I'm not, okay, we'll talk about a tax ID. It's not always necessary. I'm at a point where I'm not sure if it's needed, but I think being able to purchase tax-free for reselling would be worth it. It could be. We can talk about a resale certificate too. I'll make a note. Retired and starting, if I buy a truck and storage shed, can I deduct both? Do deducting carry over to next year if you don't make enough profit the first year? That's a little more complicated. So a truck and a storage shed, those would be fixed assets or long-term assets. And they're handled differently. A truck is a vehicle expense, and there's two different ways you can do actual or like more of a simplified method, a mileage method. So the truck is a little bit iffy. If you're using the truck 100% for business, you can take actual, which would be really easy. However, the cost of the truck is a business asset, and you only take a portion over the course of 5 years. It's a depreciable asset. Same with the storage shed. You can't take the full expense in the first year. Now there are some what is it called, Section 125 rules. So that would be one to talk with your accountant about. So there's a couple different ways those can be handled. And your accountant could look at your income this year and what you project next year and advise you the best way to do it. Those are the type of things where a good accountant or a CPA could massage, for lack of a better word, in a totally legal way, when to take expenses and when it would be most beneficial for you. Oh, good. I'm so glad you like that, Lori. We accidentally withheld more this year. Hubby's W-2, turns out it'll help in the long run. There you go. So that's what I was saying. I've talked about what if you're working a W-2 job and you're doing Whatnot, and that you can just increase your withholding on your W-2 job. This applies too if you're doing Whatnot full-time and hubby has the W-2 job. His withholding could increase because according to the IRS, you guys are one. You file a tax return as one. That withholding number, that tax paid in number on that tax return, the IRS to some degree can care less of it, who it comes from. They just want to know that as a married couple, if you're filing married jointly, you're paying enough in. So it doesn't just work on your own personal W-2. You can do it with your spouse. What am I missing here? My husband's pointing to the screen. Any suggestions for finding a good accountant that would be Whatnot savvy? Here's the thing. I don't think a CPA has to be Whatnot savvy. I am a CPA, and CPAs there's certain CPAs that are more knowledgeable in certain niches. Some of us are nonprofits, some of us are manufacturing or retail. A general CPA who handles personal income taxes, for the most part, it doesn't matter if they're Whatnot savvy. There is no special deductions that you get for being a reseller that you wouldn't get otherwise, okay? I know there's somebody else out there, I've heard them say this, that you're a streamer, you got all these deductions that nobody else gets. That is not true. The expenses that you get to take as a business are the expenses you take as a business. If you're a streamer, or if I'm, if I'm selling vintage, or if I'm selling clothing, or if I'm an Uber driver, there's a approved list of expenses the IRS approves that you are allowed to take. So just because you're Whatnot doesn't give you any other like special privileges or special things to deduct. If you haven't filed for the year but want to if you haven't filed for the year but want to for the year, what would you do? How would you go about it? Kat Dan, I'm guessing you haven't filed for 2024, or you just haven't paid any quarterly taxes so far? Help me understand that one. I'm thinking you just haven't paid any quarterly taxes, and we're into our third quarter and you haven't paid this year. First thing I would do is go to the IRS website, download Form 1040-ES, like estimated ES, and see if you can fill that form out and figure out how much you would owe. You may be surprised and be like, okay, I really don't owe that much. I'm just going to write a check, get caught up, and be good moving forward. Or if you owe a lot, now's the time to go talk to an accountant, start paying into the IRS. Let's start getting some money in there to minimize that penalty that's going to come at the end of the year. Last year, you didn't work as a new mom. The IRS is still looking that this year you should be paying in 90% of whatever your whatever your tax liability is. They're still looking at that you should be paying in. But remember, the IRS doesn't like to wait till the end of the year. They want their money as you go. Is there a form or something you can download from Whatnot that shows all the fees they charge for? There is a report section in your Seller Hub. They have monthly reports. And then at the end of the year, I think there's an annual report too that they give that covers the full year. And that, it's not the best reporting. Like Whatnot's financials are not wonderful, but you should be able to get the information you need. You may have to like dig into it a little bit. So my farm accountant that was an IRS agent many years ago can handle Whatnot activity if I start selling. They could. They could. Let's face it. It's like any. Why doesn't Whatnot provide a W-2? Kat Dan, I'm going to answer that question. Let me answer this first one first. Let's look at this like anything else. If your farm accountant from many, many years ago is now an 80-year-old guy, as a CPA or as an accountant, we are required to keep up with laws and regulations. As a CPA, we're required to get continuing education credits, which means I have to go to school at least 40 hours every single year to maintain my license, staying on top of all the new stuff. That's a CPA. They have to maintain their license. If they're not a CPA and they're, a 90-year-old accountant who doesn't use a computer, who doesn't know anything, that's when I would just kind of be like, maybe you're not even up with technology on your own. I'm not sure you're really going to understand my business. The main thing is that your accountant or CPA understand your business so that they can advise you of expenses that you might not think about. So something for Whatnot that maybe somebody wouldn't think about to expense. Vendoo fees. If you use Vendoo, if they're not familiar with cross-listing apps, your CPA may say, do you have any subscription or services that you pay monthly? They may not specifically say Vendoo. Whereas somebody who is a little more familiar with the niche may specifically say, do you have Vendoo? Do you use Spotify to play music in the back of your Whatnot? So it's not about that there's different things you can deduct. It's just about the knowledge of the industry. Have you considered doing freelance accounting for Whatnot? The Rusty Rooster, I would love to. However, I work for a very large global accounting firm in the audit space, which means that my employment contract prohibits me from doing anything more than a talk show like this. It would impair my independence. So it kind of sucks. I can't get a side gig doing what I love. So I do Whatnot. But if my employment situation ever were to change, that would be exactly what my backup plan would be. Okay, so we've talked about kind of how to put money aside. If you download the 1040 ES and you don't quite understand it, You're like, I still don't know how much I'm supposed to actually pay every quarter, or how much to increase my W-2. Go, you know what? If you can go to H&R Block, they have CPAs at H&R Block. You don't have to go find a fancy accountant. There's CPAs at H&R Block who will sit with you and help you figure these type of things out. You got to pay for it, but I have a wonderful CPA, very expensive, but worth the investment. They are. There is some truth in the adage that you get what you pay for. There is absolute truth in certain instances in that saying. So what do you need to do? Let's just summarize this really quick. And then there's a couple notes I jotted down on questions that came in. You need to track your net profit. What does that mean? If you're not keeping books, you ought to be keeping your books. You got to know that net profit, not just at the end of the year. You need to do it on a regular basis. That's part of being a business. And then you want to multiply by the correct percentage based on your situation. 18%, 27%. Now, those are roundabout numbers, right? Those are estimates. And then you want to move that money into a dedicated account. You don't want to leave it in your general checking account because you don't want to accidentally spend it. You don't want to put it in your personal account. I would suggest creating a separate savings account for it. Put it away like it's protected somewhere, right? And then make your quarterly payments or adjust your W-2 withholding. It's not super hard. Know what your net profit is. Do your books. Figure out how much you have to put it away, and make your payments. What is the easiest user-friendly way to keep books? So I probably differ from most CPAs that you're going to ask this question. My answer for this is whatever works for you. It depends on your personality and what you like. If you're a computer person and you love clicking all the buttons and you like different computer applications, QuickBooks is a wonderful program. Reseller Genie is a wonderful program. And there's a bunch more different types of programs out there that can help you keep books. If you're like, I'm on the computer enough, I don't want to look at it again, and you have a pencil and paper and that works for you, do a pencil and paper. Do what you're going to do consistently. That's what I say to use. What information do we track for Whatnot in preparation for our taxes? Your revenue, number one. The big part, all the money coming in, gross. So that number, when it says you made this much sales at the end of every show, you get that email. So your gross revenue, your cost of goods, how much did you spend to sell that product, right? And then all of your expenses. We will eventually, each week we go by, I'll be picking other topics. We will eventually start digging into each and every expense, but the big ones, your mileage, your shipping supplies, your subscription services, your telephone bill, your internet bill, all of those type of things. Any money you spend for the business. This does not include your nails. Sorry, women. Nails do not count. They are not tax deductible unless you're a hand model. Doesn't fly. Legitimate business expenses. I've spent the year buying items for Whatnot, vintage and antique items, office furniture, shelving. I'll be selling in October. Okay, wonderful. Long as you're keeping track of all of that. Some of that is fixed assets. Some of it can be wrote off this year. Some of it may help you with expenses in future years. How far back can you claim this year? You can only claim back this year. So anything that you have purchased in 2025. There's some minor adjustments to that. If you bought some stuff in December getting ready for 2025 and you didn't file a return, didn't claim a business in 2024, there's a little bit your accountant can do with that. But basically it's this year. Yep, you sold on Facebook, great. So this includes, what I'm talking about is not just a Whatnot thing. It's all your reselling apps that you're doing, all those platforms. What would be considered subscription expense? Vendoo, Spotify, any like a software type expense. I'm trying to think of something else. QuickBooks. QuickBooks has a monthly fee to it. So anything that's automatically coming out every single month. What if you sourced last year? That would be part of your beginning equity. So if you bought last year, that would be part of your beginning equity. Your accountant can help you set that up. Is it possible to get a sales tax exemption for sourcing? All right, so somebody asked that question earlier about sales tax exemption, so let's talk about this. It is possible. Canva, ChatGPT, thank you. Those are some other subscription things. Perfect. Thanks for bringing those up. Internet, phone, yep, all of those type of things. Photo room. I don't know if you use Adobe for something, like all of those subscriptions, all of those ones that you're like, man, why is another $9.99 coming out of my checking account? All of those things, if they're for business use. Okay, you can get a reseller certificate. It's not necessary. Whatnot room? Is that your home office? Yes, there is a home office deduction. That's not necessarily something you need to track in your accounting records on a regular basis. That's more of a year-end type thing that you would consider. You can claim internet every month, full bill, just a portion, just the part that relates to the business. You can't take your personal expenses and make them business expenses. Just the part that relates to the business. A lot of this stuff is like prorated. If I have internet, my kid uses it, she goes to school, she needs to research, she needs to do homework, but we also use our internet on our home for whatnot. Realistically, I can say 40% of my internet use is business related. I mean, and if I were ever to be audited, I can back it up with the use, I can show how many hours I'm online, stuff like that. So you got to be reasonable with it. Now, there's a lot of gray area here. This isn't just black and white. There's a lot of gray. IRS has rules, but the way you interpret them, and like the internet, it's gray. I always lean on being conservative. I play it safe. Do you inventory every individual item you buy, or just money in, money out? So there's a couple of different ways you can do inventory. So when you come to do your tax return, you can do a cash basis inventory, which basically means everything you spent gets written off in the year that you spent it. I don't like that. I don't suggest it. I don't ever really teach it. It is the easiest way. However, it doesn't give you true accounting records, and I don't like that. Basically, if I bought $10,000 of inventory in 2024, I would expense it in 2024 if I'm using the cash method, even if I didn't sell that inventory. So say I bought like a huge, 5 pallets for that, and most of this year I'm selling off all that stuff in 2025. I'm not having any expense for my inventory. I have no cost of goods happening in 2025. So it looks like I have all this revenue in 2025, but I didn't barely have none in 2024. It doesn't quite match up. You can do just cash. I don't suggest it. The way I teach it is there's 4 things you need to know about your inventory. And this keeps it really simple. And then when you go to your accountant, they can help you with your tax return in whatever best way fits your unique set of circumstances. But I think everybody, regardless of the method you're using, should track 4 items for inventory. Sole proprietor versus LLC. Yep, I'm about to talk about that. I have a note here. Sorry. We're going to do resale certificate and LLC. And why Whatnot doesn't do a W-2. Yes, so I'm writing your questions down. We're going to get to them. Here's the 4 things you need to track for inventory. I don't care how you're reporting it on your taxes. You should really know these 4 things to really get a good sense of where you are as a business. What's your beginning inventory? What came in? What went out? What's your ending inventory? It's a simple mathematical formula. Beginning plus what came in minus what went out equals the ending. As long as you know 3 out of those 4, you can back into the 4th one. I do have a PDF that talks all about those formulas and how to figure out inventory if you're interested. But regardless of how you report on your tax return, you really should be tracking that as a business to really understand where you are financially. It's not required, but you should. Okay. Real quick, because this is an easy answer. Why does Whatnot issue you a W-2? Because Whatnot is not a job. You do not work for Whatnot. You work for yourself. You're in business for yourself. Whatnot will give you a 1099-K at the end of the year reporting your sales. So you only get a W-2 if you work for somebody else. This is the beauty of Whatnot. I work for me. I don't work for somebody else. Okay.
Thank you, Heart-Centered Soul.
Oh, thank you, Heart-Centered Soul. Yes, I didn't see the comment. Thank you. Okay, resale certificate. You can get one. You can get one if you want. Thank you, Natural Stay High. Basically, because we've been talking federal taxes, resale talks about sales tax. Every time you buy something, you pay sales tax, and then you sell it on Whatnot, the buyer pays sales tax, right? Carmen's Corner, I'll answer that in a second. and a spreadsheet for my cost of goods. I use a spreadsheet for my cost of goods. I'll talk about that too. So for a sales tax exempt certificate,
The PDFs are available on the Buy It Now. And the only thing we ask is if you make the purchase, send us a DM with your email address so we can send it to you as soon as possible. Once we finish the show, we try to send you the PDF right away.
Yep. If you want a resale certificate, all that means is that it saves you from having to pay that sales tax. In order to get a resale certificate, sometimes, and it's through your state, it's not through the IRS, it's not federal, it's state specific, you may need to have an EIN number. I'll talk about what that is. I don't have one. I'll just pay the sales tax. To me, it's minimal. I don't know, maybe something I'll change in the future. Part of it is just laziness on my part. There's nothing wrong with getting one. It does save you from having to pay sales tax at your level because you're just the pass-through. The end buyer then is going to pay the sales tax. So that's what a resale certificate is. What other questions do I have? An EIN. An EIN number is basically a social security number for your business. That's in layman's terms, in the easiest way to say it. If you are to get a sales tax exempt certificate, some states will require you to have an EIN. To get an EIN, it's like a 5-minute process. You go to irs.gov, you can get it just like that. You'll have it in a few minutes. It basically replaces, thank you so much, Cherish, that is so sweet. It basically replaces your social security number, not your social security, you have your own social security, but it's like a social security number for your business. It's called Employer Identification Number, EIN. It's not necessary unless if you have employees and you're doing payroll, you want an EIN. Like I said, sometimes the state will require one. Sometimes if you're buying wholesale, they won't sell to you without an EIN. So if you're in those situations that you're finding it's being asked for a lot or it's prohibiting you, you can get one. It is not necessary. I do not have an EIN. I don't have employees. My social security number goes on my tax return. So it's not necessarily something you need unless you come up against circumstances that it starts prohibiting your course of business. Do sales tax exempt cost money? They do not cost money. Paying a flat fee for a certificate to avoid sales tax. No, unless maybe certain states. As far as I know, the states that I'm familiar with, mainly Maryland, Pennsylvania, Georgia, Florida, Texas, they do not charge for a sales tax certificate. I do not know every state law, so every state. Yeah, you go to your state website. You can type in whatever your state sales tax exemption certificate, and it should pop up. And it's just like probably an online application these days. You probably don't even need to mail anything in. Okay, I think I'm answering all the questions. There was one about an LLC versus a sole proprietor. All right, this is my soapbox, y'all. If you've been around, you know me, and you're just like, uh-oh, she's about to get on her soapbox and tell you what she thinks. There are a lot of people on Whatnot who are going to tell you, and even people who sell PDFs, just like I do, who are going to tell you you need an LLC. If you get QuickBooks, if you get a lot of accounting software, there's usually a screen in there that says, let us help you create your LLC. You are going to get inundated with people who are, I made an LLC. It is not necessary in all circumstances. I cannot tell you, nor can anybody else on Whatnot tell you if you need an LLC. Because your tax situation and your legal structure of your business is dependent on your unique set of facts and circumstances, the best way for you to determine if you need an LLC is to talk to a tax advisor, a CPA, maybe a financial advisor, and possibly an attorney, or a combination of those. To say, in my case in Tennessee, why would you not do it? Because there's reporting requirements. The rest of you, there's also quarterly reporting requirements with that. And for me, there's not a time cost benefit. Maybe in the future there might be, but right now I'm like, I don't need the headache of the quarterly reporting for your sales tax. Back to the LLC question. There are certain circumstances. So if I'm a sole proprietor, the minute I pick up my phone and I click start show and I sell something, I am a sole proprietor. That goes on you file a Schedule C as a sole proprietor that's attached to your Form 1040. You're in business, you're a sole proprietor. There are certain circumstances then that maybe you want an LLC. You have certain assets that you want to protect, and not just your home. Just having a home doesn't mean you need to have an LLC, but maybe you have a warehouse. Maybe you have employees. Maybe you have a place. Maybe you own some real estate, some other type of real estate. Maybe you have other activities, or maybe you have plans for growth, or maybe you have partners that is not your spouse, where you need to create more of a formal business structure. So there's a lot of considerations. You take into what's happening now, where do I want my business to go? What am I selling? What am I doing? What's my liability like? There's a lot of different factors that need to be looked at in totality to understand if you really need an LLC. Being an LLC does not save you in some taxes, dependent on a couple situations. If me, Tracy, Zoe's Treasures, and my husband decide we're in business, we're a sole proprietor. Okay, I want to make an LLC. I create an LLC. We're considered a single member LLC. If it's just you or you and your spouse, if you're filing that married filing joint tax return, you're considered, hi Tracy. You're considered a single member LLC. Guess what tax form you file as a single member LLC? Schedule C, the exact same tax form you file as a sole proprietor. There may be a few things out there. There may be something with insurance, there may be some minute things. Again, if there's something minute that an LLC would benefit you, that's where talking to a CPA, a tax advisor, or an attorney, they'd be able to pull that out of your set of facts and circumstances and say, you know what, because of this thing happening in your business, it makes sense. Does being an LLC mean? No. TurboTax has versions that will work with being an LLC. So the other thing, being an LLC means you have to file with your state. There's annual fees for it. If you have a partner, now if it's not just you and your spouse, because that's not really considered a partner, you're considered one entity. But if I have an unrelated partner, it might make sense to create an LLC, because then I need more of a formal structure with an agreement on how we're splitting, who's putting what money in, how we're splitting the profits of the business. They need to have their money reported to them. I need to have mine reported to me at the end of the year on a K-1 for taxes. So there's circumstances where it makes sense. But please, I just hear the LLC question so often. It is not just, I'm in business, I need an LLC. I'm a sole proprietor, I'm a CPA, and I've been a sole proprietor for years. If you're selling food products or skincare, makeup, and if you get sued, it could, again, and this goes back to, it depends on your business, your circumstances. Some of this would be an attorney. This is why I would say talk to an attorney also. What's the risk there? How much risk do you have? Maybe if you have a high level of risk that you need to protect assets, it might make sense. But maybe if you're reselling, you're selling prepackaged food, is not something you're making. There could be a lot of different, and this is why I'm saying not one person can tell you. You need somebody who really understands all of the facts of your situation. My accountant told me that once I reach over 30K in sales, that changing to an LLC has additional tax benefits. I would be curious as to what those are. There's none that I know of. There's a few obscure things with some type of insurances and stuff that's just far above what we're dealing with. But in general, no. If you're a single member LLC, you get the same benefits if you're a sole proprietor or if you're not. Now, in those very rare circumstances, that's where it comes that maybe it does make sense. In very simple terms, an LLC protects certain assets from liability more than the sole proprietorship, correct? Or is that a bad assumption? Yes, in very simple terms, but not always. You can have an LLC and not treat it in the proper format where you have, what's it called? It's like an umbrella. It's like a veil over your business. If you pierce that veil, you don't keep proper minutes, you're not filing what you're supposed to be filing, you're not treating it in the way you're supposed to be treating it, a good attorney can rip that LLC apart in 2 seconds and attack your house. So just because you have an asset doesn't mean you need an LLC. It doesn't always protect you. And that's when I go back to saying you need some trusted advisors in your life that you are paying money to give you their best advice based on all of your facts and circumstances. but it's not, please don't ever think that it is an instant, like, oh, I'm in business, I need an LLC. I hear that so much, and like, I just cringe when I hear people saying that. Oh, thank you, Pit Love. I appreciate that. You're sweet. When you sell things, speak with an attorney. There you go. Get advice. We're businesses, you guys. Just because we're doing whatnot in our pajamas at home from our couch does not mean we're not a business. We should treat our businesses just like Nike or Under Armour or, Bill Gates, Apple treats their businesses. Have a trusted attorney. There are affordable ones out there. Have a trusted CPA or an accountant that you can talk to. And then once you start accumulating a little bit of wealth where you can maybe invest in something, get a financial advisor to help you make those. Corporate Veil, thank you. That Doubletree, thank you so much. I couldn't think of the name of it. That's what I was trying to say. Corporate Veil, thank you. Let's see. Is California, we need a business license. And you may. Every state has some unique state rules. And again, I know Pennsylvania, Florida, Georgia, Maryland. Those are the states I either am or have been licensed in, and I've become familiar with those state laws. I couldn't tell you any other state. And even some of them, it's been a while since I've lived there. I'm probably pretty rusty on some of those. Hello, Extending Gray Shot. All right, real quick. Let's see. I think I've answered the questions that I noted down here to answer. If I missed one of them, please put it back in the chat. Oregon taxes are out there. So are Pennsylvania. They're crazy. I came from Florida. Well, we spent some time in Georgia. We had state tax, but Florida has no state tax. Y'all, we should just mass exodus. Texas, Florida, Tennessee, no state tax. There's like 3 others. I just don't know what they are. Probably states I don't want to live in, but the 3 that I do like, that I do know about, no state tax. Okay. Due dates. So we've talked about, so you want to talk about tracking inventory? Okay, we can talk about that. But real quick, due dates for your quarterly payments. April 15th, it's always on that 15. If it's on a Saturday or Sunday, it goes to the Monday. April 15 for this year, for 2025. April 15, June 16, September 15, January 15 of the following year for that fourth quarter. Live nomadic and have no address. There you go. So how do you track inventory? Oh, you asked somebody asked, it may have been you, if I have a cost of goods spreadsheet I use. I have a spreadsheet I use that tracks my revenue, cost of goods sold, all of the key metrics that I look at. So I get my net income from there. I don't put my expenses on that. I keep that separately. I actually use QuickBooks for my expenses, but I do have a spreadsheet to give me immediate KPIs that I look at. I track number of people on my show, first-time buyers, returning buyers, how much I do free shipping. So I track all of my shipping expenses, what my shipping cost was compared to my revenue. So those are kind of things that I do on a spreadsheet. Everything else goes through QuickBooks. I don't endorse QuickBooks. I use it because it works for me. I only started using it this year. Before this year, I just used an Excel spreadsheet because that's what worked. I went to QuickBooks mainly because they have a built-in mileage tracker. And I realized last year I really suck at tracking my mileage and I needed something more automatic. I thought Whatnot tracks analytics. They do. They'll give you analytics, but from the analytics that they provide you, there is so much more you can do. So speaking of that, I do a chat show on Friday mornings, buyer-seller chat show, 7 a.m. Eastern time, Friday mornings. And this week is all about those analytics, what you can do with Whatnot Analytics. How do you use them to actually make decisions, to pull information out, to track stuff? They do pretty good about giving you some basic information that you can then utilize. So if you're interested in learning about that, I'll be doing that Friday morning. So I'm trying to figure out how to do screenshots without showing all my numbers. I'm very transparent about a lot of stuff, but I do not believe as sellers that we should be careful in putting out what your sales numbers are, what your revenue is. It's just, I don't know, maybe I'm old school. I feel that that's a personal business thing. It's not something I'm willing to share openly. But there are other things I do share. So I'm trying to figure out how to show you analytics without giving away all of my information.
Yes, we do.
Yes, so if everything we do is casted to YouTube, So you never have to buy anything. You can always go there and rewatch it. You don't have to like spend money. You can just go watch anything you want to see again. I'm not exactly sure why you guys want to watch me again, but you're always free to do so.
The only difference is that if you're here, you can ask questions,
Yes.
and YouTube is just replay.
Oh, thank you so much, Cherished Echoes. Tracking inventory. Somebody asked me a question. I don't think I totally answered that. The way I track my inventory, and again, this is one of those things I'm going to tell you, find the system that works for you and that you will continue to do. Keep it simple. If you make some complicated inventory system, what are the odds that you're really going to keep up with it? And I speak from experience. I love processes. I love systems. I mean, I have my background is in tax, but I've spent the last 10 years in audit. I really love digging into processes and systems. But the more complicated you make it, the less likely you are to keep up with it. The way I keep up with my cost of goods sold, everything comes into my home. I have colored stickers. They're little just dots, little stickers of different colors. Each color relates to a dollar amount. That sticker gets stuck on that item. So if you buy things from me and you see a little red sticker, a little black sticker, that's my secret right there. Now you know my secret. So then when I sell that item, I know exactly how much I paid for it. I total all that up by show. That gets dumped into my spreadsheet. It works for me. It's super simple. Comes in, sticker goes on the bottom. Whenever I eventually sell it, I can record then what I sold it for and what I paid for it. So that works for me. Of course, when I spend money on inventory, it all goes into my bookkeeping system and it goes into QuickBooks. But that's my cost of goods sold. It just works. It may not work for clothing. It may not work for depending on what you sell. If you're handmade, you probably got a completely different system. Find what works for you, and you may have to try 2 or 3 different systems. I've been through probably 5 different systems in the last 2 years to figure out what works for me and what I'm going to do consistently that I will do. Because again, I will overcomplicate and then I won't do it. I way overcomplicate, yes, but I do books monthly, very good. And knowing that my accountant wants prioritized, I have simplified. There you go. And this is the other thing, you guys. Stay on top of your accounting. You cannot don't wait until April, that's it. Accounting is so much, most of us, not accountants, those of us that are not accountants don't go into business because we love the accounting. We go into business because we love what we're creating, we love reselling, we love vintage, whatever it is, right? So we think of this accounting as like this chore we got to do. It's like doing the dishes after you cook, right? But it's really your roadmap. And I don't say that just because I'm a CPA, but it's understanding what you're doing gives you so much power to make decisions in your business. Don't underestimate the value of keeping your books. Do you include shipping and sales tax you paid on your sticker or just the base amount you paid? I include the full amount because that's your cost of goods sold, the full amount. Somebody asked about sales tax. Why Whatnot? Does Whatnot tell you how much sales tax you pay every year? It really doesn't matter because they pay it on your behalf. So when your buyers buy something, they pay sales tax. Whatnot gathers that sales tax and sends it to the appropriate states. You don't have to, as a seller on Whatnot, that's part of the beauty that our Whatnot fees cover. We don't have to worry about it. Right now, I'm just using your own ledger, pen and paper. Wonderful. Again, I'm going to go back to, I'm going to be that odd one out that I'm not a CPA that's going to recommend a specific system. You need to do something that you are going to stick with and that works for you. And that's really dependent upon your personality. All right. I did not run one giveaway this whole time. I do apologize. I do like to try to run them during my talk shows, but I get talking and I forget. So Friday, I will run giveaways, I promise. They're not huge. I do little postcards, but come Friday, maybe you can get some postcards. It is almost 10 o'clock, and I do have to get up and do my full-time job tomorrow. So, and we've been talking about accounting. It's a pretty heavy topic. Let me see. I track the cost of every item I source. Yep, okay. So you don't break out shipping on items you bought as a separate expense. Not on items coming in, no, because it's part of the cost of obtaining that item. Any tips we give to Whatnot sellers for education purposes are tax deductible. You can call them a business expense. That's kind of a gray area. I wouldn't count my tips that I give somebody as a business expense. That is me as a person enjoying what you do. That's kind of a gray area. I don't want to advise you one way or the other. Talk to your accountant. I wouldn't count tips as a business expense. Now, if I buy something that I'm going to resell, that's 100% a business expense. I love seeing so many people here interested too. Thank you all for coming in and like listening to me. I am also always continually surprised that you guys show up and stay and listen. So I genuinely appreciate that.
Thank you.
Will I adopt you? Yes, come live in my home. Thank you. Thank you guys. All right. We're going to go find somebody to raid. I have no idea who's on this time of night. So I'm just going to like click the raid button and see. It is not OBS. Backwoods. My husband uses a bunch of other stuff, but he does do free training in OBS. If you are interested, he'll put his name in the chat there. Please feel free to reach out to him. He does free one-on-ones to teach about graphics if that is something that you ever want to learn about.
We used to use OBS in the beginning. Thank you, Heirloom Cabinet. Appreciate that. And but I'm in the media. I used to be in the media, so I have a lot of equipment. And soon enough, we realized the OBS was not going to be able to do what we needed. So we started migrating to different things. But OBS can be used to do certain things like this.
OBS is still great, and he'll teach you on OBS. So reach out to him if you're ever interested. No charge. He'll set up like a one-on-one with you and spend some time and walk you through it. Answer any questions you have.
Yeah, send me a DM.
Yep, just DM him. Okay, let's go see who's on, you guys. Have a great rest of your week, and we'll talk to you soon. Oh, I Love Discounts is on. All right, we're going to go see I Love Discounts. Oh, it's my husband, Zoe T. Mod. We'll put his name in here right before I hit the raid button. There you go. Zoe's T's Mod. All right, bye everybody.
Honey, what are you doing?
Yes, Chubby Bucks.
And OBS is free.